Numerous Tesla followers are aware that the stock has been on a tear recently. The stock price has increased by approximately 30% in the past month alone. On Monday morning, the stock price resumed its upward trend, rising by 1.4%. There is a possibility that Tesla's full self-driving function has at long last been surpassed. Welcome to the Stockroom YouTube channel. In today's video, I will share with you everything you need to know about the Tesla stock split, so make sure you watch the video until the end. Do not forget to like the video, subscribe, and comment what do you expect about Tesla stocks. With no more excuses, let's get started. CEO Elon Musk remarked on Twitter over the weekend that Tesla has now manufactured more than 3 million vehicles after its Shanghai facility reached the 1 million vehicle milestone. That fact has investors seeing through some of the hoopla relating to Musk. Stock price increase attributed to multiple factors. CEO Elon Musk's feud with Twitter has gained some additional detail. While investors are still unsure of whether or not Musk will be ordered by a judge to complete his offer for the social media business, his recent sale of roughly $7 billion in Tesla shares tied to the acquisition given investors some insight about how the deal would affect Tesla and his holdings. Musk also said last week that the Tesla semi-truck would be released this year, a year faster than projected, while the company's Cybertruck would still not be available until next year. A report from industry observer Torque News on Friday emphasized the economic advantage of the electric heavy truck over diesel-powered vehicles. It demonstrated a 200-mile drive with Tesla's truck would have less than 1/6 the gasoline expense. The financial markets and Wall Street have been taken for a wild journey in 2022. One of Wall Street's favorite gauges of market health, the S&P 500, had its poorest first-half performance in 52 years, and the Nasdaq Composite, which is heavily weighted toward tech stocks, has had it even worse, falling as much as 34% from its November peak to its February low. Despite the upheaval, investors have been fascinated with the many stock splits announced by corporations this year. Tesla, an electric vehicle manufacturer, is the third stock split candidate worth considering. This will be the second split for the corporation in as many years. Tesla's competitive advantages are drawing investors to the company. It's been over 50 years since a car company started from scratch and eventually reached mass production. Despite setbacks like semiconductor chip shortages and COVID-19 lockdowns at the company's Shanghai Gigafactory, Tesla appears to be on track to break the 1 million EV delivery mark for the first time ever this year. Tesla has made the switch to regular profitability in addition to manufacturing. In the years leading up to 2020, the company made a significant portion of its revenue from the sale of renewable energy credits to other automakers. However, since that year, the company has been able to generate GAAP profits without relying on REC sales. Tesla has posted a GAAP profit of between $1.14 billion and $3.32 billion in each of the past 5 quarters. Investors' faith in Tesla CEO Elon Musk as a visionary is also a contributing factor to the company's success. Musk has kept Tesla's customer base enthused about impending breakthroughs like the Tesla bot, a robotic humanoid that might serve a variety of purposes, and has helped diversify his company's operations. As of right moment, the best stock split to invest in is, ultimately, if share prices hadn't increased dramatically after exceptional execution, companies like Amazon, Shopify, and Tesla wouldn't have announced stock splits. However, of these 3 stocks that have just undergone a stock split, only one is the superior investment option at the present time. To me, it's obvious that it's not Tesla. Musk has overpromised and underdelivered in his role as CEO time and time again, which has earned him the ire of the Securities and Exchange Commission on several occasions. Despite what the stock price may suggest, almost every big project or innovation proposed by Musk has been delayed, including robotaxis and the Cybertruck. Teslas are also pretty pricey. Investors in Tesla, which is expected to see its competitive advantages erode over time, will pay around 54 times Wall Street's estimated earnings in 2023, while other auto stocks trade in the single digits on future P/E ratios. Although Shopify seems to be everywhere these days, I still don't think it's the best option for you. As a retail-focused business, it may see sluggish expansion as a result of higher interest rates and a shrinking U.S. gross domestic product. Shopify, without a doubt, has a mouth-wateringly vast addressable market, But the firm still has a ways to go in terms of improving its bottom line before it can entice long-term investors. Amazon is currently the best stock split buy out of the three. Although Amazon's P/E ratio is shocking for all the wrong reasons, it is not a useful metric to use when evaluating the company's worth, because the majority of Amazon's operating cash flow is reinvested into the company. Price to cash flow is a more accurate valuation metric. Investors paid a multiple of 23 to 37 times trailing 12-month cash flow from 2010 to 2019. Wall Street expects Oz to account for a bigger share of Amazon's overall sales by 2025. Yet despite this, Amazon is only worth 10 times cash flow at this moment. If Amazon's results are as predicted, the stock price will drop to an all-time low. When compared to Shopify and Tesla, Amazon is currently the most valuable and innovative option. In what could be a long-awaited showdown, Tesla's full self-driving capability may have seen its first serious challenge. Tesla's full self-driving, the controversially called driver assist feature, may have met its equal. The opposition against Tesla doesn't consist of a senior U.S. senator, a team of top-tier specialists on autonomous driving technology, or the most vocal safety activists in the country. The experts have all cautioned that so-called complete self-driving isn't quite that. The system may do the wrong thing at the worst time, Tesla warns, so it requires a vigilant human driver who is ready to take control and correct the system as it navigates local roadways with steering, braking, and acceleration. The Senate and other institutions may provide these opponents with a conventional bully pulpit, but they hold little real power to alter policy on their own. The Department of Motor Vehicles, a less than glamorous public body that many Americans associate with excessive wait times, may have more of a real impact. The California Department of Motor Vehicles is the first U.S. government agency to actively take action against the branding of full self-driving. Traditionally, the Department of Transportation's National Highway Traffic Safety Administration has been in charge of regulating the automotive industry, with input from Congress over whether or not to regulate specific technologies, such as driver assist systems. However, in recent years NHTSA and Congress have been distracted by the enthusiasm and lobbying surrounding a more attention-grabbing technology: completely autonomous vehicles. Tesla has long added caveats about the capabilities of its technologies. However, the DMV states that one Tesla disclaimer contradicts the initial inaccurate or misleading labels and statements, which is deceptive and does not fix the infraction. The dispute between Tesla and the DMV may require protracted litigation to resolve. According to Bryant Walker Smith, a professor at the University of South Carolina Law School who studies autonomous vehicles, a settlement may involve changes to how Tesla talks about the systems on its website, a vow to avoid similar behavior in the future, or even new names for its products. A system that is used by a driver is said to be full self-driving. That has given me the vapors. The statement by Smith. How can a human driver interact with a fully autonomous vehicle? According to Tesla, all of its 2016 models were equipped with the necessary hardware for full self-driving, and the company promised to release supporting software for the feature shortly thereafter. Elon Musk, CEO of Tesla, has predicted that self-driving Teslas are only a year or two away every year from 2015 through 2022. More than 100,000 Tesla owners have access to the beta version of full self-driving, but the software needs to be constantly monitored since it can make potentially life-threatening judgments. This is not the first time that a dispute has arisen around vocabulary terms. Tesla contested the German court's deceptive language ruling from 2020.